Hello everybody and welcome to the crypto session brief. We're on Tuesday the 14th of March 2023, approaching midday here in Europe. Let's take a look at what's been going on in these crypto markets in the past 24 hours and look towards the session ahead. And what a 24 hours it has been across global markets, but crypto's just been quite astonishing, and the correlation, let's say, with equities is completely broken over the past 24 hours at least. I'm not saying that's going to remain, but with that move that we saw yesterday on BTC, where we were up, I think almost over 11% on the day. Let me just double check here. Yeah, over 11% in the past 24 hours. And breaking back through that 50-day moving average, firstly 23, 24 easily, and then broken and closed importantly above 24, and then we've used that now as a platform, as you can see, with the low of the day at that 24k, looking to break higher. The movement probably came as somewhat as a surprise, really. We'd seen a lot of declining prices after two key crypto-friendly banks were shut last week, and we saw the USD coin, the U.S. DC, a major stablecoin, depegged. So all the signs were there really pointing towards move lowers, and that's what traders were thinking, because over $100 million worth of Bitcoin shorts, basically a bet against the rising prices of Bitcoin. So people were looking to push it back towards that 20k handle that we saw on Friday. They all got liquidated yesterday. It was the highest liquidated amount since January the 14th. Which was, if I can just find it, I think it was one of these days here, this particular day here. So it's actually January the 15th, January 14th, January 15th, when you saw that rise, and you can see a similar size momentum bar. But there was 500 million in liquidation across several crypto futures at that point. So yesterday there was actually 78% of all BTC futures traders taking on losses. There was some data that I found from CoinGlass online. Liquidation, of course, is basically when we're closing leverage positions. So that should be rather obvious to anyone who's following these briefs, because we are trading leverage contracts here with CFDs. The price is rising, even Bitcoin price rising, even though we saw U.S. bank stocks dropping steeply. There was the narrative then that I could produce, or I've seen produced online as well, is that has Bitcoin here been viewed as some sort of flight to safety? Yes, it's been trading as a risk asset now for the best part of a year, maybe even more. We've seen tech stocks correlated with BTC when interest rates have been rising, when we've seen a hawkish Powell, etc., etc. You've been seeing a negative impact on the price of cryptos, in particular BTC. And all this red that we saw recently was basically that, because all of February we just kept on seeing data beat after data beat in terms of suggesting that inflation wasn't going away. So Fed repricing, 50 basis points was on the cards for the March meeting, but that's now flipped to potentially a 0 basis points rise, all in the space of a few days in the market. So it's been a remarkable, not even a week. In fact, yeah, let's call it a week, because it was a week ago that we had Powell's testimony, and that was when we actually saw some markets moving lower, equities move lower. We saw gold moving higher. So you've seen gold move higher off the back of yesterday's banking. We've seen the SVB bank. We've seen SVB, not SVB bank, collapse. So we've seen that, and the price action that we've seen since then suggests that people have been buying BTC, because basically it's outside the banking network, isn't it? So US dollar has actually been suffering. We've seen the US dollar moving lower against the likes of the euro and the pound, for example, and the yen. The yen's been moving higher. So some of the flight to safety currencies like the Swiss, the yen, have been getting bid, and we've seen a similar sort of move on BTC. So maybe BTC has actually been seen here as a flight to safety, which is quite interesting given the paradox that the fact that it's been viewed as a risk asset for the best part of 12 months. But maybe that could explain the price action that we've been seeing. So BTC now, from a technical perspective, it's had a strong couple of days. We know the last time that this happened, that doesn't guarantee anything moving forwards though, because that daily bar was faded back down 2 weeks later. Basically it erased all the gains. So we're just watching here, because again 25k is a massive sticking point. Going back here, that's the high from August. So basically this 25k handle is going to be absolutely critical moving forward for the next direction of BTC. is there enough momentum there to really take us through? And is this flight to safety really got, is it serious? Let's just say Ethereum is at the 1700 handle. This is a handle we've discussed on these briefs now for quite some time. You can see we've ran into that ceiling there, and once again it's provided some resistance. So clear sellers at this level. Get through here though, we could see a sharp move into 1790. Otherwise, like BTC, we look to fade this move back lower, take some nice risk to reward trades with stops just above here. But remember, a lot of traders might be going for that play, and that's why when you do see a spike through, you get that leverage that exasperates the move. Leverage wiped out, that exasperates the move, and you see a sharp move up into 1790. But otherwise, the risk to reward here looks to be to the downside, with the fact that we've had knockbacks off this level on several occasions now. Litecoin is currently trading at, where are we, 81. So this one has also faded some of them losses from mid to late last week. 88 is the overhead level. We're now just kind of in the middle of nowhere, to be honest. There's a bit, there was some intraday sort of price action. Some movements around this sort of area, 80, 81 back in November, but not too much else apart from that. Bit of support here perhaps. So you could argue that this sort of 80, 81 area, for the time being, is the sort of the line in the sand. Above here we see moves into 88. Below we see this being no more than a dead cat bounce on Litecoin, and a move back down to 75, 60 even. A lot of this could be down to the Fed repricing as well. Don't forget that over the past 24 to 48 hours, we've seen markets price out expectations of a 50 basis points hike at the next meeting to 0. In fact, in Nomura, the Japanese investment bank, some of their economists today suggested that the Fed might even cut rates at the March meeting by 25 basis points. So it's just been an incredible turnaround. The Fed terminal funds rate is now sitting at around 3.8%. It was almost 5.7% not too long ago. So the repricing has been something that we've not seen, I think. Well, the drop in yields, U.S. 2-year yields, a 3-day decline. It's the largest decline that we've seen since the 1987, I think it was 1982, in fact, definitely October 1987 stock market crash, and then I think even the 3 days, I think even 5 years before that in 82 I saw, but I can't just exactly remember correctly. But regardless, it's pretty serious. In fact, let me just show you the Treasuries chart from today, because I posted in here this chart, which is the repricing that we've seen. So at one point, this was just last week, March the 8th, markets were looking at the peak funds rate just below 6%. Now they're looking at peak funds rate just below 5%, with a view to, by 2024, by the end of 2024, being below 4%. Markets were pricing over 5.5% just last week. So that's been the staggering movement that we've seen, and of course that could have had an impact on BTC prices moving higher as well, because low interest rates are that's been good news for risk assets. We've not seen the follow through on equities yet, because the banking sector has been absolutely slammed, and that's just been weighing on sentiment, particularly with equities. So interesting times, interesting few days. Hope everybody is doing well, didn't get caught out too much on the short side of the liquidations that